Hey, there you go.
There we go. Grab my phone.
Cool, cool. Like I said, we're gonna give it about 2 more minutes. Let people, late showers, get in here.
All right. How you doing today?
I'm doing good.
Good. We're in the middle of reworking a house for flipping, so it's getting hard trying to set up schedules now.
I bet.
Yeah, I hopped on Dogecoin.
Yeah.
But I got in there like 2 o'clock in the morning 2 nights ago. And we were just talking about Bitcoin. And I sold off mine at $9,000 this past August.
Oh, talking about the Bitcoin?
For both of them, Dodge and Bit.
Oh, okay.
Yeah.
Yeah, today it's been a little bit sideways. I had bought it. I got like $10 in Dogecoin right now just to see what it does. It's funny. It's really my son's $10, but I borrowed it from him. So he's up roughly, what's he up? Roughly about 35%. And it's holding the 8-cent breakout area, so that's cool.
Right. Yeah, I mean, same thing with Bitcoin. Bitcoin was just holding there. It finally came up. Yeah, I don't know. I think with my Bitcoins, I just need to stick something in there and just leave it.
Yeah, that's the best thing because they're gonna keep. It's gonna get this long-term hype. So
yeah,
with Elon doing what he does, and all the other stuff, it's best to just leave that one in there and just let it work.
Yeah, that TTOO came back also.
Yeah, well, you'll see it find a support, and then the shorts that were in it that were aggressive, have to go ahead and cover up, and that's when it starts to begin to bounce again.
Mm-hmm.
All right, we're about to kick things off. What's up? How y'all doing? How you doing, Jamal?
Good. So I was on the phone with your mom for like an hour.
Yeah, that happens. You get stuck. But that's cool. Just make sure. Why is it still doing this? All right, so week 2 is coming to an end. Hope you all had a chance to watch the course material videos. Is there anybody in here that didn't get a chance to watch the week 2 video? Cool. That's what's up. I'm still going to go over most of the slides, and then if we have some time, we'll talk about some tickers, because I got like a list of 15 tickers right here that are all in play, and this market is absolutely crazy. Matter of fact, before I even do that, I'm not sure if y'all saw that something I posted in the recommended video tabs, but it's a message from Tim Sykes, of course. So I want to play this little rant for you all. Let me see if it opened up right. Let me know if you can't hear my computer sounds.
Yeah, no audio.
No audio. All right. That's cool. That means I just hit the setting up here real quick. Share sound. All right. So
there's nothing else. And that's how you have to think about your education. Like, this is the time to really push it. You can learn 10 years worth of a normal.
Still silence.
All in like the next few.
I know why. My bad. It's because I got my headphones in.
I hear it.
You do hear it?
Yeah.
Oh, what's up with you, Doug, man? Why are you lying to me?
Man, I don't know. It's not coming through. Oh,
Jamal,
you know what? Let me make sure that my stuff isn't muted.
Jamal, could you hear that?
Nope, and I wasn't in the car pumping gas.
Well, you don't count. All right.
Man, you still use a car that uses gas?
I know,
Stop
right?
it. Stop it. It's Honda. Team Honda all day.
Yeah. All right. So my volume is up. My audio is up.
All right, I'm gonna try like this real quick.
Has this worked in the past, Roland?
Yeah, it's worked in the past. I mean, freaking Jody hears it right now, so.
Oh, okay.
2 months if you take this.
I hear it.
You hear it?
Yeah.
Doug, did you hear that? Doug, did you hear that?
I just heard some static. So you might have been playing. Go ahead. I mean, I watched the video, but go ahead.
Okay, yeah, just watch the video and you get a chance. But I definitely wanted to show right here. So that's what I'm gonna do right here. All right, here it is.
And that's how you have to think about your education. Like, this is the time to really push it. You can learn probably 10 years worth of a normal stock market all in like the next few months if you take this seriously. So that's why I'm making these videos, just to like help you get the right mindset. Some people make excuses like in emails I see or messages, and I'm just like, do you understand what's going on right now? Like, they make these stupid excuses like, oh, my broker doesn't do this. Get a new broker. Oh, I can't do this. Shut up. Get the right mindset. Stop wasting it. Being spoiled people. You have the opportunity where we have technology. You have the tools. You have the resources. You have the plays every single day. You have to be a madman. You have to be a madwoman to ignore this stuff. You have to be the most spoiled person in the world not to learn from these opportunities. Don't be spoiled. Be humble.
Yep, that's it. So he rants a lot, but he has a very good point, and that point is you have the opportunity to learn a lot of information within a short period of time because this market is unreal right now. Market is unreal right now, and usually the amount of in-play stocks that we have, just the last month alone, you don't see that many stocks in play in the year, honestly, and that's just for real. So definitely take this time to really look at these tickers, really look at these charts, really look at these patterns, because they're going to repeat. They're going to happen again, and if you learn it now, you might not be able to trade it now, but you can prepare for when it comes back around again, and it will come back around again. So I just wanted to take the time and just throw that out there. I think that was a real good rant that he did because it was so applicable. But week two. So week two, we went over technical analysis, how to read candlestick charts, how to judge price action by particular characteristics, and how to just go over the overall, technical analysis, reading the charts. So by now, I assume that everyone knows that the green candlestick is an up candlestick and the red candlestick is a down candlestick. The green body, the body of the green candlestick, it opens at the bottom of a green one and closes at the top. With the red one, it opens at the top of the red candle body and closes at the bottom. And the lines to the top and bottom are called wicks. So that's pretty simple, basic stuff right there. You should know that there are different time frames for the candlestick chart. So you can change your time frame to be each candlestick representing a day, minute, 5-minute, hour, 4 hours, whatever. And that allows you to zoom in and zoom out of the big picture move. I always check multiple time frames before trading a stock. The first thing I check is the daily. The next thing I check is like the 5-minute chart to see, what's it doing today. And the next one I check is the weekly. All right, where did it come from? What areas are potential trouble areas for the stock? And I try to build up a good risk to reward trade based on that information that I see. And I find that by using different time frame stocks.
Hey, Roland, are you going to touch on? Yeah, question. Sorry. Are you going to? You said which areas are trouble areas for a stock. And so I think I know what you mean by that, but are you going to expand on that later in this meeting, or do you think it's a good idea to expand on what trouble areas for a stock is?
I'll show you right now. OGCN or OCGN? Oh my gosh, hold on. I'll show you right now because I had an example that I saved earlier. I just gotta make sure I can find it. NOP. Okay. OC. Okay. So perfect. Hold on, wait for it to pop up. All right. All right. Doug, I'm gonna mute you real quick. All right, so check out OCGN. This is the runner today. It was basically had news after hours on Friday and basically ran from the 4s, and this morning ran all the way up to the $19, $20 area. I knew it was going to kind of top out around $18, $19, and this is why I knew. Go back. So that's the 15-minute chart. Oh, it won't let me go back. Oh, I hate how this thing works. So that's a 15-minute chart. Here's the daily chart showing the breakout over the 460 area right here. Once it broke out, it basically continued for 2 big days all the way up to $19. And here's what I mean by zooming all the way out. Darn, that's the wrong one. So here's what I mean. So when you zoom out to the weekly chart, you can see areas where it's flat and you see where it tops out at. You see where it's topping out right here, right here, right here. If you draw your line straight across, this line right here is right at the top of this area right here. So based on the volume and based on, you know, how the stock is running, you can almost guess where it's going to top out at. If it didn't top out at the $4 area, if it didn't top out at the $4 area where it broke out from, it's going to keep going to the next area. The next area was this area right here, which is the $10 area. If it breaks out above the $10 area, it's going to keep going up to the next area where it's topping out at, which is one of these candles, which is like the $15 area. Once the $15 area gets broken out of, then it's going to try to challenge the next, you know, major daily resistant candle or major weekly resistant candle. And that's where these are. And that's why you got to use the price action characteristics like topping and bottoming to kind of judge these areas. Now it can continue if it breaks out above this $20 area. Then my next guess is going to be either this area right here where this candle's topping out at, or this somewhere in this area where these candles are topping out at, you know, $30, $45. But I doubt it gets that far just because it's so overextended just from 2 days. You know, it's got to take time to consolidate those gains before it continues upward. So does that kind of answer your question? This is the weekly chart. So each one of these candles is a week. Let me unmute you. Or I asked you to unmute, Jamal. Does that kind of answer your question using the wicks from back here?
No, I knew it. I was right. You were looking basically trouble areas are where in the past it didn't really have success breaking resistance levels or past resistance levels, because you talk about that a lot in the chat, like I wouldn't do it, blah blah blah, because I wouldn't expect. I think you was talking about the same thing with the Cisco thing, actually. Cisco, and it was another stock. So
yeah,
I just didn't know if anyone on the call may have had the same question, like when you hear, oh, trouble stock, blah blah blah, what does that really mean? Which is why I spoke up.
It just means areas of resistance if you're buying. You know, wherever you think the stock is going to go, if it has trouble getting to that area, I just call it a trouble area. But in order to identify that resistance, you know, you got to use those higher time frame charts like the weekly or monthly charts. All right. So that was time frames. So when we talked about technical analysis, the biggest key thing that you want to think about with technical analysis is previous resistance becomes support when stocks break out to the upside, and previous support becomes resistance when stocks break down to the downside. And that's pretty much like the God rule, the golden rule of technical analysis. Also know that, you know, some stocks follow an up or down trend line. So the support can be a moving support. The support can be, you know, rising or declining, you know, as the stock moves along. It doesn't have to be just a straight linear line. It can be gradual, gradient. All right. So this one's pretty simple. Major price resistance is an area where the price cannot go above, no matter how many times it tries. Major price support is an area where the price cannot go below no matter how many times it tries to test it. You always want to be buying just above the major price support, risking. And when I say risking, when I say buy off of something and you're risking it just basically means if it breaks under that area, you cut the trade. So if I'm risking the bottom of this candle, if I buy on this candle, then if this, you know, falls down below this candle, then I'm cutting it. So I'm cutting off the trade, getting out, cutting my loss, whatever. Same thing for major price resistance. So this is areas where, you know, the price can't go above here. So once you see the stock going towards the major price resistance, you know, you want to start thinking about getting out, thinking about taking profits. Just like that $20 area with OCGN. Once it starts getting up to, you know, $18 or so, you know, it starts slowing down, and you can see that on the candles. So as you can see, when it bounces off of the support, look at the size of the candles. Starts off with a small, you know, regular size candle, and then it slowly increases to bigger and bigger candles. This candle is like double the size of this candle, and this candle is the same size. But as it gets closer to the resistance, you know, the buying intensity slows down. So you see the candles get smaller. And the closer it gets to resistance, the candle gets smaller. And then once it hits resistance and comes back down, the selling pressure gets intense and those candles get big. And the process repeats back at the support area. A good example of this was a trade I took on Sing today. I was trading Sing, and I'll show you what happened. Put a 1 minute chart. Of course, it went way further than I thought it was going to go, but this is the area that I want you to show you. There it is. So Sing is right here. I bought on this day and I was selling on this day. But as these candles started getting smaller, I started getting more and more nervous about the stock potentially coming back down and, you know, testing support. And I wanted to get my sells off before the first test of support. So, you know, these candles this was a good move. This was a good move. You know, I can tell level 2 was still pushing, and this candle was a big move. But then after this big candle, you see how the range of the candles kind of tightened up. There was no more big candles for a while. And once I saw that, I'm like, let me go ahead and just take these profits, you know, book this and get out, because I used the intensity of the candles to kind of figure out when the buying was slowing down and the selling was going to begin. And even though it didn't sell off hard, but it is still, you know, consolidated and didn't even move up any further. So you can still use that as a tool to kind of gauge, you know, when to get out or when to get in if you're trying to short the stock, of course. Any questions on that concept? The intensity of the candles. Cool.
Whatchamacallit, so when you're watching that, do you always have your time set to a minute, or do you have it set to a different time frame? Because I know some brokers do two. I think Webull does 2 minutes, and Fidelity has 1 minute, 5 minute charts.
Webull has 1 minute as well, but yeah. So when I'm looking to going back to this, when I'm looking to get in or out of a position, I'm usually zoomed all the way in. So when entering as in a trade, I'm using either the 1 or 2 minute time frame. And then while I'm trying to let stuff run or setting it idle, whenever it gets to like consolidation areas like this, I'll switch over to the 5 minute chart. That way it keeps me a little bit more patient. And then when I look to exit, I switch back out to the 1 minute chart. So and if I'm really trying to hold the stock, then I might switch from, you know, the 5 minutes to like the 15 minute chart. 15 minute candles to base, you know, what I want to do.
Now, the body of the candle is reflective of the volume of trades, right? Or volume of movement.
The body of the candle,
Right.
or down here or up here.
Up top.
That just reflects the price. I mean, now, can you? I don't know. That's kind of a funky question. Can you ask that again?
So the body of the candle. Okay, so I know it's showing the top and the bottom of the price at the time. Well, I guess you know what? Yeah, it makes sense. I'm looking at your chart and seeing the volume at the bottom.
Yeah. That volume corresponds to the candle directly above it.
Right.
It's the movement of the price, Doug. So
Yes.
like if you go to the beginning of what he said, the open for each green,
right.
The green that starts at the bottom and closes at the top. So when it did that within that time frame, how big was the move? Did it go from $1 to $2 or so forth or so on?
Exactly. So this candle right here, when it opened up, go ahead, Doug.
Okay. So then when you look at the wicks, right? So on some of them will have a much longer wick. Is it just because it only, because you would think that the volume would move up with the length of the wick?
Well, the wick the wicks only represent the price action movement. So going back to this right here. So when the candle opens, say this is a day. Whenever this day of trading opens, the price was right here. Throughout this one day, that time frame, that session, the price dropped down to a low. It spiked up to a high before closing at the area that it closed at. So the wicks that you see is basically whenever the price spikes up, but it can't sustain that price within that time session, and the candle closes.
Okay, and I'm not sure how long Robinhoods are. If it's 15 minutes or an hour, sometimes it seems like their candle wicks are only moving once a day.
Yeah, but, they don't update their stuff right away. Their chart is lacking behind their price action.
Right. Because I mean, I'll see like a high spike in price, but then when you look at your close and sales for that time period, you know, that's where you're seeing.
Gotcha.
Yeah.
Yeah, Robinhood is messing you up. You know, I would kind of stray away from Robinhood just because they print their candles. I think they still print their candles in a delayed data time frame, even though they give you real price quotes or realish price quotes. Whenever the candle closes and you know they're on to the next candle, that's when that candle prints. So it just depends on what time frame you're looking at.
Yeah, every day I keep saying I'm going to get off of Robinhood. I need to.
Definitely need to. It's way more better options out here. Like I got a whole list of 15 stocks that been trading 150% in the last 2 days that you can't get on Robinhood. Can't get on Webull. You know, you're just missing out on and these are the easiest stocks. They're not the OCGNs where you know everybody and their mother is trying to trade them. There's a bunch of shorts trying to trade them. There's hedge funds trying to trade them. There's less competition. You know. And that's where the easiest money is, low stress money. All right. So that's cool. Downtrend. So does everybody understand the characteristics of a downtrend? lower highs and lower lows.
Yes.
Okay. So one of the things about the downtrend and the uptrend is basically the same thing in reverse, just the opposite. The key things to take away from on the downtrend and uptrends is where they top out at. So I always say draw your lines in, draw your lines in, draw your lines in. Whenever the stock spikes up and it tops out, you got to be putting a line where that high is, because it's going to play a part. It's going to play a key into the price action later on down the road. As you can see right here, I put my line in, and then when it pulls back and breaks out past that line, you know, on the pullback on the second leg up, you know, that this area is supported. And you can see that on your chart. And if you draw the lines up front, it'll make it a lot easier. And when I say drawing the lines, I mean just like this. Let's go to 5-minute chart. I'm gonna show you an interactive broker. So boom, the stop price spiked up to 550. Boom, as horizontal line right at 550. So later on, I can just wait for the stop price to break out past there and just buy the breakout of the line. I make it easy technical analysis. Or let's say if I'm still in it and I'm trying to hold the stock, you know, if the stock doesn't come down, if it doesn't break under this line, then the stock is good. You know, it's good to hold. It's being supported, which it does. It does like this U-shape curling action, breaks over the new high, which is right here. Draw that line in, which is 6 cents, and goes up to put in even a higher high at 7 cents. But check it out. So it starts consolidating and then it drops. And it drops under this high, but look where it bounces at. 550 area, which was our first line that we would have put in. So it's a cheat sheet to technical analysis to support and resistance by just basically putting your lines in and drawing out, you know, where the stocks top out at and where the stocks bottom out at. All right. So that's pretty simple. So this is just an example of showing where previous support becomes resistance when stock's breaking down. So stock breaks down, it goes underneath this support area, it pops back up, and now it's resistance. Then it breaks down again underneath this support area, comes down, pops back up, gaps up the next day, but gets stuffed out at that same former support that became resistance, and the trend just continues. It's just a downtrend. But you know, if you map out your lines, they'll all line up. All of these levels will line up, and those will be your key levels for that stock. Same thing whenever stock price is going up. Support or resistance becomes support when it goes up. So here's the meat and potatoes. This is what I really want to get to, because this is where not everyone's confused, but this is where most of the confusion comes in. So these are your price action characteristics, your technical analysis characteristics. So we talked about lower highs, talked about higher lows, and vice versa, higher highs and lower lows. Consolidation, it's basically two forms of consolidation we talk about: trading in the channel and basing, whether it be higher or lower. And we talk about topping action, where you see the wicks to the top side, and bottoming action, where you see the wicks to the bottom side. And we talk about reversal points. So let's get into some of these. So I won't get into higher highs or higher lows unless you want me to. Does anybody want me to go back into higher highs or higher lows? Lower highs?
No, good.
Okay. All right, so consolidation, sideways price action is basically when the stock is trading. You know, there's trades going on, but there's no significant price movement to the upside or to the downside. So, you know, the stock will stay in a certain range for a certain period of time before it either breaks out or breaks down. That range is the consolidation area. As you can see right here is a good picture of, you know, consolidation, where, you know, within this hour, the price started at 210 and then it ended at 210. But right here in this 25 minutes, the price went from 210 to 260. So significant price movement outside the consolidation range, really no price movement inside the consolidation range. I have another live example of this as well. So SFOR, it's one that was giving me a little bit of trouble today. I ended up, you know, being all right on it by the end of the day. But, I just couldn't figure out the consolidation. I tried to buy the breakout over the high right here. It kind of faked out, went down, and then once I got kind of tired of the consolidation, I cut it. But then I saw it curl back up, and I tried to buy the breakout. Thought I was gonna go right here, and it didn't work out. But instead of me cutting it, I just widened my risk a little bit to the bottom of this consolidation zone. The 23 cent area is where I had my risk. Let me draw my line there. It was drawn in on my other chart. But basically 23 cents. So I used the bottom of this consolidation zone as the area that I would cut my trade if it didn't go my way. And as you can see, after the consolidation, it started getting off of that low line, started to curl up, making a little bit of higher lows. And eventually it did break out and push up to new highs. But this one was the pain in my neck all day. But that's a great example of consolidation where the stock price is just really staying between 24 and 25 or 23 and 25, 23 and 25. It was trading in a channel between 23 cents and 25 cents. And then when the channel broke out to the upside, it was a big move outside of this consolidation. So 23 to 25 cents is roughly, what's that? I can't see. 9%, a 9% move or range. And then from the breakout area to where it went, it was an 18% range. So it had double the range in, less than half the time. So that's how you can tell it's consolidation. And it's trading in the channel. So trading in the channel is basically when the stock price is stuck between two levels, that 23 cent and that 25 cent area. And it just hangs out in the levels. And you can kind of use your higher lows, lower highs, and those price action characteristics to figure out which way is the channel going to break. If it starts getting a lot of pressure to the upside of the channel, and those higher lows start forming up, then it's likely going to break to the upside. If it starts getting a lot of pressure to the downside of the channel, the bottom of the channel, you start seeing more lower highs, then it's probably going to break down. So that's a form of consolidation, trading in the channel. Another form of consolidation is basing higher and lower. Basing is just a consolidation that basically preludes a move. So it's basing right here, not really doing anything, just consolidating. Then it has a breakout, boom, it breaks out to a higher level, and it starts basing at that higher level. And then after it consolidates for a while and then breaks out to another higher level, and starts basing at this higher level. So this is what I call basing higher. If it continues and starts basing this area, it'll probably be basing right here. So you can kind of see the pattern. It's like a stair step. It goes up, then it flattens out for a while, and then it goes up again and flattens out a while. Some people call it a flag pattern or a pendant. It's just easier to call it basing higher or low for me. And here's the example of basing lower. Same deal. It starts in a certain range. It breaks down from that range, has a significant price movement from that consolidation area, and starts basing at a lower range. And then if it continued lower, it would do the same thing. And that's a form of consolidation that I look for. So if I'm shorting, I'm looking for the stock to base lower. If I'm longing or buying the stock, I'm looking for it to base higher, consolidate and break out, base higher again. Topping and bottoming action. Go ahead. What you got? Anybody got a question?
Yeah. So on that base thing, so you would look at the history for, and I guess that's what any ticker, but you would figure out if this stock is actually doing that pattern, that basing up or down based off of what it's had the history of doing.
Not necessarily. Basing is in the consolidation. I mean, yes and no. So I use it more on the intraday time frame. As you can see, it's like the 5-minute chart right here. So I'm looking for like an intraday move for it to base higher, like breakout, hold the breakout area, like breakout, hold the area, doesn't break down from where it came from, and then use that to kind of see if it's going to continue up higher. On a longer term, you can kind of see, stocks basing. Trying to see if I can have an example. I see one. I mean, I guess you can see it right here.
Even if you don't have a long term, because what I'm getting to is like if I'm watching the stock during the day, like just regular movements, you don't have the rest of the picture. So all you're doing is watching each candle as it comes about. So boom, it breaks out, then it starts to consolidate. What happens? So if you're watching that same stock, what happens to signify to you like, oh snap, okay, it's about to break out again, and you know it, so you play it as opposed to missing the play? In that type of pattern, what happens that oh yeah, it's about to break out?
Okay, so I'm trying to think if I can see one. I think I have one. Maybe. No. All right, so I'm going back to this example. So price action characteristics, you got to look for those higher lows, man. The higher lows will tell you the tell, and the level too. So if this spiked up right here and came down, first I would look for it to hold the VWAP area,
right,
and to start making higher lows off of this intraday low. So if it had this spike, came down and held this level, spiked up again, came down, held the level, step a little bit higher, and started consolidating that area, and started making higher lows right here and right here, this is where I'd be looking to enter, because the stock price can't even get back down to where these bottoming candles are.
Got it. I kind of got it.
You see what I'm saying?
That,
yeah.
And then, like you said, the
level
two, where
you
we'll
start
say,
seeing
hey,
the bids stack up. You start seeing the ask get chipped away. It's basically, you got to use all your clues to figure out the best move. It's not one indicator that's going to be the telltale indicator for you to get in. You got to use a combination of everything and make a good educated guess based on the clues that you have. Like, boom, okay, they found OJ with some bloody gloves. He had a knife in his back pocket. He had pictures of the house plans that he murdered somebody in. Use all those clues to develop a conclusion, a hypothesis of what happened or what's going to happen. Same thing right here. It spiked up right here. Put in the top. I'll put my line down right here, and now I'll already have my line right here. So when it came down on this big candle, this big hard pullback, I'd have been cool because it didn't break under this line. This previous resistance right here, where it topped out, is becoming support right here, and it's creating a base on top of that. And then once it starts to curl up from that base, it's another move is imminent.
got it.
Ooh. All right, so topping, bottoming action. Beat this one with a dead horse, or beat the dead horse with this one. If you see topping, if you see long widths to the upside, that is resistance. It's an area where the buyers can't push the price above before the candle closes, whether it be a daily candle or, going back to this one, whether it be an intraday candle like this one right here, or like this one right here. This is momentarily resistant in this area until the buyers rally back up and break out. Same thing for the bottoming candles to the bottom side. Every time the price gets down to this area, it pops back up. Every time the price this is a bad example. I probably should change this up. It pops back up. This one's a little bit choppy. But every time the price gets down here, it pops up. Use those wicks to the bottom side as a guide to show you where the support is. Let me see if I can give you a better example. What's the one I dip bought the other day? I think it was Sing. Yeah, it's the one I dip bought the other day. Let's see if I can find a better example. No, it wasn't Sing. It was TSMP. Here it is. I think the triangle is gonna cover the line, but it's hard to see. But there's a small bottom wick right here where I dip bought this one. I used that wick to kind of identify where that support was. And if you use it right here, once it gets down here, you see the double bottom and the bottom wicks right here. As soon as it gets that double bottom and that it wicks out, it bounces up. Now, granted, it comes down and breaks under it for a while, but the wicks tell you exactly where the stock is going to bounce at. As soon as it has a double wick right here, it bounces up. As soon as it has a wick down here, it trends up. A wick down here, it trends up. So you got to use those bottom wicks, especially on like dip buys and stuff like that. Let me see if I can show you a good dip buy. I think it's ASTI was a good one. There's so many plays, it's hard to keep up with them. No, it wasn't this one. You just look at the daily right here. Look at this daily chart. When the stock has this big run up right here, this 3-day run up, 1, 2, 3, 4, basically, and then sells off. Once it sells off, it gets to a bottom, but you see the bottom wicks in this area. Once it gets down to this 1.5 cent, 1.25 area, you know, the wicks, they get wicky at the bottom, and you start seeing the price move, it bounce up. This area is support. So you can see when the general move, it kind of sits on this area right here and starts to trend upward. And you got to use those bottom wicks. It's easier on an intraday time frame. Matter of fact, I want to give a better example. The best example to see a bottom wick is on the panic dip buy. Sometimes it might not be a wick though. Like this one, it wasn't wicky. This one, you can see the bottom wick right here before it bounced back up. This one, you see the bottom wick right here before it bounces. You see the top wicks right here before it reverses back down. So yeah, use those wicks. It tells you where things are happening. It points out the levels that you need to have. Look at this one right here. Fell off the cliff, but you see the wick, and this is the 1 minute time frame. So in this 1 minute, the stock price got way below 40. It got down to 43 cents, but it didn't stay there. Before that minute ended, it popped back up to 48 cents or whatever before continuing upward. So those are just the wicks. All right. So reversals is basically the momentum shift. So we use the topping action to spot whenever the price is going to reverse, the stock is going to reverse. So it's like the joints in the stock movement. So when the stock price comes down here and gets underextended, it hits area where it can't get below, then the momentum reverses back the other way. And then when it gets all the way up here and hits the area of resistance, and it can't get above it anymore, then the momentum reverses back down here. Here's a good bottom wick right here. And it bounces all the way down to here. Can't get below this area again. So the momentum reverses. So reversal is when the momentum reverses. We look to enter and exit trades near reversal points. So I wouldn't want to be buying right here. It's better to be buying down here than to be buying up here. It's better to be shorting up here than to be shorting mid-range. You don't really want to enter a stock mid-range. You want to enter it closer to the support side, closer to a recent reversal from down to up, and you want to ride that momentum back up. Or same thing if you short it. If you're looking to short the stock, you don't want to enter it mid-range. You want to enter it when it's higher up. That way you have more downside and there'll be more room for you to work. All right. Oh, what I do? I didn't mean to do that. How I go back? There it is. All right. Any questions on any of the reversals? Whoa! I had to hit you with the mute, Doug. You're echoing. So, any questions on any of the reversals, topping, bottoming, basing, higher lows, consolidating, trading in the channel, any of those?
No, I'm good.
Okay. All right. So, all right, you good, huh? That's what you said, Doug? You good?
Yeah,
Okay.
just got home and grabbed the microphone
Okay.
and brought my audio up.
I got you. So, all right. So if y'all good, you're good. You know, I won't beat the dead horse. But there's a number of the price action characteristics on these examples. You can point out many of which on all of them. So, for example, this is trading in a channel right here. This is a breakout. These are higher lows. Some topping action up here, some bottoming action down here, some reversal from right here to down here to right here. Basing, this is a little base, pops up, base is higher, pops up, it's probably gonna base right here. So just number of price action characteristics. And whenever you look at these tickers that you pull up and you pull up the charts, you got to be looking for these. These are going to tell you which way the stock price is going to go once you figure out how to master it. All right. So VWAP. VWAP is an indicator that I use because it's reliable and a lot of other people use it. So when things happen near VWAP or with VWAP, you know, it usually affects the price and it's usually a good indicator. Really four things that I can gauge from VWAP. I use VWAP as a dip buy entry. We'll talk more on that in the long setups. I use it for a short bounce entry. We'll talk more of that on the short setups. I use it to signify when stocks are gaining momentum and when stocks are losing momentum. And that's pretty much it. You know, VWAP is key. Just like going back to that I want to say SFOR trade. This one that was consolidating all day. So it's been a number of times where it kind of broke under VWAP. And I was nervous. When it was down here, I was really close to cutting the trade because VWAP was broken. But, you know, it wasn't a hard crack where it got rejected. VWAP was, in this particular trade, VWAP was a revolving door. So I'm fine if the stock price goes under VWAP, but then it has the ability to pop back up and then go under and pop back up. What's concerning to me is when the stock price goes under VWAP and then tries to pop back up above VWAP and it can't get back above VWAP. That's when it kind of concerns me. But VWAP is a very reliable indicator. So here's an example of a VWAP dip buy entry. Basically waiting for the stock to become a little bit overextended past this VWAP area. I base my overextension on the gap, this little space right here between the VWAP indicator and the body of the candle. Whenever it becomes overextended, it tends to pull back somewhere near the VWAP region. And it's important to note that VWAP is a zone or area. It's not a point. It can act as a point, but whenever you're using it for dip buy entries or support, it's best to use it as a zone. You know, you don't want to be too exact because you would get faked out. So the VWAP dip buys, you buy somewhere near this VWAP line or a VWAP area and look to sell near the high day area. So sell somewhere around here or more. And as you can see, you know, there's multiple opportunities for, you know, a VWAP dip buy trade. I do a VWAP dip buy trades all the time. Not as much lately, but you know, before this particular session started, it was probably one of my number one trades. Here's another example. Stock price pushes up, is way extended from the VWAP indicator, creating a gap between the candles and the actual VWAP line. It pulls back to the VWAP area. Somewhere in this zone, you buy it up in the zone and look for it to either test this area again or break out to a higher area. Sometimes it tests it, sometimes it breaks out and goes further, sometimes it barely gets to it, sometimes it doesn't get to it at all. So, each trade is different, and this pattern is not exact. It doesn't work 100% of the time. So just keep that in mind. Another example of VWAP dip by entry. Gets overextended. You see the gap between VWAP and this price. It pulls back down to the VWAP region. You get long somewhere right here. Look to, sell into this test, push, breakout, or even hold to even further, just depending on what you're looking at. So VWAP is a hybrid setup for me. I can use the VWAP dip by entry as a standalone pattern to trade, where I'll just get in right here and sell right here, and just be done with it. Or I can use it to enter, like a breakout day. If I know the stock has potential of going 2 or 3 more days, I want to get in, but I don't want to get in at any price. So I'll wait for that first big spike and for the pullback to ideally the VWAP area, and I'll get in there and I'll risk that area, all day to sell into the next day. So that's why I kind of call it a hybrid setup, because I can use it for an intraday pattern, or I can use it for an entry into a swing trade. So VWAP also serves as key support in intraday trading. As long as the stock holds VWAP, it can be considered healthy. So even as the stock is not breaking out to higher highs, which this one hasn't, it had a morning spike and kind of pulled back and just consolidated all day. But because it held VWAP during that period of consolidation, the stock, ended up closing decently and pushing the next day. So I forgot what stock it was where it held VWAP all day. I think it was Sing. Let me see what that one. I think it was Sing. Let's see. Yep. So it's Sing. So I got in on this right here. Let me zoom in a little bit. Got in right here. It kind of had it was kind of like a VWAP dip buy. I was thinking it was going to set up to be one. It didn't work out that way, but it basically held the VWAP area all day. So I was comfortable. Even when it was, downtrending and selling off, back down here, I was still comfortable because that VWAP was holding support. So I knew it was a healthy, strong stock, especially on a first green day breakout day like it had. Cracks below VWAP can signal that the stock is breaking down. So when the stock doesn't spike in the morning, or it has a lot of sellers, or it doesn't gap up and it goes sideways like this, it doesn't have much movement to the upside, and it clings to this VWAP area, and then it cracks below it right here, that usually means more downside is imminent. So if you're long this stock, then you should probably get out when VWAP cracks. And if you're short in the stock, then you want to look for this VWAP crack. Another example right here, cracks below can signal more downside, cracks below can signal more downside, cracks below can signal more downside. Just using the VWAP. And pushes through VWAP can signal upside. So when it cracks below, when the stock has been above VWAP and been a strong stock for a couple of days or whatever, and then it cracks below, then that's a momentum shift. But when the stock has been selling off hard, or it's been beaten down a while and it pushes through VWAP, it's the momentum shift in the other direction. So this is one that was having like a first red day, and it sold off. Actually had a VWAP crack like right here. That was the initial VWAP crack, and it had this much downside before, of course, bottoming out and doing a reversal back to the other way. The momentum swung this way, and then it kind of pushed through VWAP here, but here's the real push through VWAP right here. Whenever it held a higher low, and the volume kind of came back in. You see this big volume where it had this push right through the VWAP area, and it basically it leads to momentum to the upside immediately. That push through VWAP. Here's another example. The stock was coming off of a few red days in a row, and this was a day that actually ended up being green. It just pushed through the red green area, went green on the day, and started making some higher lows. Eventually, it pushed through VWAP, and when it pushes through VWAP, upside is likely, especially if it's been beaten down for a while. All right, so here was a quiz. I think only a couple people turned in their quiz. You guys owe me some quizzes. I know, Doug, you're good, but if you can answer these questions, then you have a decent understanding of week 2 stuff. Any questions on the VWAP indicator or any of the level or week 2 stuff? Going back to price action characteristics or technical analysis, anything week 2?
I think for me, this candlestick stuff really got clarified just because of the stupid what is it?
Robinhood.
Robinhood thing. Because I would see the long wick, and then I'm looking at the body, and I'm like, well, wait a second here. we have a long wick. The body is short, but it's it's trying to follow along with stuff that you're talking about, but it's because just the way that it was mixed. So I mean, as far as like today really helped out clarifying that up, because like here, right where your cursor is now, you see these two with the long wicks. I'm like, okay, well, if it hit that, what's keeping it from holding that high or holding that volume?
Sellers.
Right.
So every time it got up to the high of this candle was 1764. So every time it got up to 1764, or when it got up there, before this 1 minute can change, like what time is this? This is 11:58. Before it became 11:59, the
People
price
sold
went
that.
price went down from 1764 back down to 1720s. And then it kind of continued back down, so it got a little bit underextended, then it popped back up. So yeah, this one was real choppy. When you get these real high volume stocks, real hard to trade, especially if you're trying to get precise entries. Kind of got to just like throw an order out there, wait for it to get filled. Hopefully it has like a decent price movement, and then just throw another order out there, wait for it to get filled. Because if you're trying to like meticulously, or I want to get in at 1750 and get out at 1825, the level 2 and the time itself are going to be running crazy, because the stock had like almost 600 million shares of volume, just today alone. So it was just crazy. All right, so any other questions on level 2 stuff, or level 2 on week 2 stuff? Jamal, you good? Breeze, you good? Haven't heard from you, Breeze. You good? I need some questions. I need to answer 2 more questions before I move on. Give me 2 more questions. Doug can't ask them. That means Jamal can come up with one, and Killer Breeze can come up with one.
I'm BC, but I'm good. No, I understood. I actually already went to week 3. Yes. Okay.
Cool.
And that answered the question that I had. I couldn't figure out why you was seeing stocks that I wasn't seeing, but I found out that, and you tested on this course too, that there's stocks that are not traded on the platforms that I'm trading on, nor are they reported on general
websites.
Yeah.
That's why whenever I post like the big percent gainers in the pre-market, I put big percent gainers listed stocks, because OTCs don't really trade in the pre-market. They can trade in the pre-market, but they don't really trade in the pre-market.
Touch it. Stop. Don't touch it. Yeah. once I saw that, I was like, okay, I'm not dumb. I'm not missing anything. I just wasn't looking at the right site. So no, I'm good on week 2 though.
Okay, cool.
So, quick question.
Yep.
Once again, another stupid Robinhood thing. Do they? Oh my goodness, what is this? IPOs. Does Robinhood block IPOs?
Do they do
I
what?
mean,
what?
do they not display IPOs?
It depends on it depends on which stock, how quickly they get them out there. I don't really know. I don't really mess with
Okay.
IPOs too much just because
Okay.
it's not in my niche. But
Okay.
I know Webull has a list of IPOs that you can get pre-IPO. Like you can buy in at the IPO price before it goes public and starts moving. But I'm not sure about Robinhood.
Okay.
All right, so this is gonna be fun. So where is this at? So we're about to go through this one chart pattern that's happened 15 times today, which is a major daily breakout. And you can see the OCGN. It had one that went from 450 to 20 in 2 days. So the key on these breakouts, and we're going to touch on this week 4 for sure, but I want to go over it now because it's fresh in my head. The key to these breakouts is to be buying somewhere on the breakout day. It doesn't have to be right at the breakout level. If you buy right at the breakout level, that's even better. You know, you're a sniper trader, and that's what we want to see. But any day, anytime on the first green day of the breakout level is an ideal time to buy to hold into the next day. So here's OCGN. Okay, that was the same one. Why is it? I don't like the way this does this. Oh, I gotta go the other way. Okay, I got it now. So we just saw this intraday chart. Basically, breakout level. The breakout started in after hours, continued all the way into the pre-market, consolidated all pre-market, and then when the market opened, had a huge move from the $9-10 area all the way up to 14-ish, pulled back down to 11-ish, chill for another hour or so, and then broke back out and went all the way up to $20, which is crazy. That was the weekly chart that we've seen earlier. So here's another one, Sing. This is the one that I was trading today, but I basically bought right at the breakout level. The breakout area was like 4 cents. Buy it on 4 cents. And Sing did not go to 17 cents. It only went to 7 cents. So a lot of these OTC charts that you see, they have misprints. And that's another thing with OTC. They have misprints or prints that go in after the market close that really doesn't count. And you'll see it from the intraday chart. So if you see something, a crazy move like this, it's probably not it. Sometimes you see like a crazy long wick. If you go to the intraday chart, you'll see that really wasn't the case. But this one basically went from gapped up to 4.75 and went to 7 cents today, just off the breakout. Best thing to do is to buy on the breakout day and sell a day or two later. Oh, it went the wrong way. No, I can't go back this way. That's crazy. So here's the breakout area, seeing the 398 area. It basically topped out right here, came down, consolidated for a week, started to curl back up, and it stuck its head through the breakout area, came down. I bought it on the dip. It held that VWAP area that I was talking about, and basically had some strength into the close, gapped up and spiked up. So breakouts. Hemp, this is a weed stock, but it had a nice breakout over a penny, basically the 1 cent area. This one's real beaten down, but if you're buying on this first green day, you can buy it and sell it that same day and make a killing, or you can wait the next day or wait 2 days and make, hundreds of percent gains, in just 2 days by just buying the breakouts. And this is what's hot right now. This is what you need to be looking at, is buying breakouts today, holding it for a day or two. CBBT, same thing. Breakout area is 22.25. It topped out there, came down, did this cup and handle curl pattern, broke out. You should be buying it right at that 22.25 or higher around the end of the day. It gaps up the next day, doesn't even touch that level, and just continues on to 37 cents. Oh, shoot, went back the other way. Darn it. CBBT, all right. And here it is, the 22 cent area. Same, it looks just like Sing. It looks just there, all same chart pattern. Stocks, they don't repeat. History doesn't repeat, but it rhymes. So you start seeing these patterns, you gotta identify these and take action. Nice breakout at the end of the day, right when you want to see it, or after the 1500 hour. It basically runs into the close and gaps up the next day and goes crazy. MCOA, this is one I took a loss on. I accidentally bought this, but I was accidentally right, but I didn't want to be accidentally wrong, so I cut it off for like a $130 loss. But the breakout was this 1.0189 area. You buy anywhere on that breakout day. Once it crosses that area, the next day it does a dip down, but it also goes all the way up to, I think the high was 262. So it was like right here. This one also had a misprint, so it didn't go up to 750s, like at 260. But still, 1 cent to 2 cents is 100% move. That's like buying a stock at $50 and selling it at $100. So don't get too wrapped up. Oh, it's only a 2 cent stock. You want the lower costing stocks because it's going to compound your money faster on a smaller move. Here's what the MCOA intraday chart looks like. The breakout area was right here. It broke out, kind of came down, was a little bit weak, but then it regained that breakout area kind of right there at the end of the day. And then the next day it gapped up and continued. ENZC, this one, breakout over 26 cents right here. This one, you buy on a breakout day, you can sell 2-3 days later, double your money. And this one just really kept going. It actually went crazy. I don't think it got to 220. It might have did. I'm not sure. We'll see. Now, only went to 75 cents. So that one also had a misprint. So all these stocks, they have the same pattern and they have the same misprint. So go figure. Here's that 26 cent area. Came down and just had a nice little uptrend into that area, broke out and just kept moving. INND, same pattern. This one broke out from basically a penny and it went all the way up to 7 cents within 1, 2, 3, 4, 5, 6 days. You buy on the breakout day, which is this day right here, sell a day or two later and you're up 250%. Here's what the intraday chart looks like. Here's where it topped out. Here's the breakout day. You buy on this day. It closes at the higher day. The next day it gaps up and it goes all the way up here before coming down and testing support. But still, from 1 cent to 250, that's 250% or 150%. ASTI, same deal. This one is kind of a newer breakout, so this one still has some potential. This is today's move. It broke out over that 375 area, and I anticipate that it's going to move for another day or two. So this one could be a candidate for your watch list. And here's that breakout area over that 375 area, where it kind of had a nice little consolidation. It kind of based right at that area, then popped up, and right now I kind of wait on this one. It kind of double topped at the end of the day, which is usually not a good sign. But all of these have been gapping up. So basically, you want to react to the stock and not anticipate as much, and you can probably react if it gaps up above 5 cents and keeps going. FORW. Here's another one. This one's towards the latter part of a breakout move. So you get the breakout over 20 cents here. You buy on a breakout day, you sell it a day or two later, you double your money or whatever. This one went straight full supernova straight up and it's having its first red day. So For this one, the next move I would look for is some panic dip buys. When it has the intraday panic, it comes down, sells off, 30 to 50%, straight down, and look to buy that dip for a nice quick bounce. But here's what that breakout area looks like. It broke out on this day right at the end of the day, exactly what you want to see. Next day it gaps up and it just goes berserk. It goes from 20 cents to 40 cents. It's from 9 a.m. to about 1 o'clock that day. Next day it gaps up and does it again. Next day it gaps up and does it again. Next day gaps up and does it again. So this market we're in right now is kind of crazy. You usually don't see moves that go on for this long. It may be 2-3 days max. We're seeing 5-6 days in a row. One of the last ones is INKW. It broke out over the 3-cent area right here. Buy it on that breakout day or the next day. Hold it for a day or two. It went from 3 to 13 and a half. Plenty of upside potential. Here's that breakout area. As soon as it broke out, it went straight up. 3 to 6. 100% of your money right there so far. And then, it comes down, consolidates for a while. At the end of the day, it closes decently. The next day, it goes from 6 to 12. So if you don't have these OTC stocks on your watch list, if you can't trade them, if you don't have the right broker, you need to go ahead and get yourself in position to take advantage of these opportunities. And the last one is ALPP. This one's towards this latter part of this movement as well. It broke out over basically the $5 area, went for 2 days, went from 5 to basically 9.50. Now it's losing some momentum and should be coming back down here in a couple of days. And here's the chart where it broke out over the 5-cent area. Closed strong, next day gapped up, had a morning spike, kind of tested some support, but it was able to regain some strength, closed strong, and gapped up again. And that's it. So I just wanted to go over a few of those plays. There's like 15 of them that you can just basically just throw your money at it and it's going to go up. And it's basically these OTC breakouts. So any questions on any of that before we call it a night?
I'm good.
Okay.
That was some good information.
Yeah. Hopefully you was writing some things down. This will be
Excellent
recorded.
information, Doug. And you can't use it on Robinhood, so get rid of it.
Exactly. Go ahead, get you a real broker.
Yep.
Get rid of your baby brokers.
That's it.
No, seriously, Robinhood is like trading blind, man.
Yeah, I've had
Gosh, I just saw this.
what you got?
Freaking Riot and Mara gapping up to $30. It was $17 today. $20 today. That's crazy. These are Bitcoin related stocks. Riot, Mara, MGTI. I think it's MGTI. That one probably is gonna be up. Nah, that one's not. BTSC. I had a whole watch list of just Bitcoin stocks. This one's up a little bit. BTCS. I think that's the one that's really up. No, not really. But yeah.
Yeah, I just want to know, when are we going to be able to get some Acorn?
Oh, Acorn. And the last one, what I think is triggering all of these OTC breakouts is the monster move on TSMP. So as you know, I've been trading this one a few times, had a few different buys and sells on here, but this one has been hot since 2020. The end of 2020 is run up from less than a penny all the way up to almost $2 today. And this one's getting ready to have its first red day and be food for the shorts, but it's still in play. When it has these intraday panics, you can buy these intraday panics and make 10-15%, like this right here where it drops down from $1.70 down to $1.50, back up to $1.70. That's 10% right there. If you're a sniper trader, if you're looking to capitalize on a low risk move, buying panics is a low risk move. Like this one right here, it gets really overextended. It comes down way below VWAP, but finds some support here and then it bounces back up here. That's another 10% move. So once you get your account size where you can get in and out of trades, then you're going to want to kind of formulate different types of trades based upon, you know, the type of funds you have. Here's a good one right here where it panicked all the way from the 170, the same area, down to the 130s and bounced back up. You know, this bounce was 20% from 130s all the way back up to the 150s. So this bounce right here from 105 to 125, that's 20%. So it doesn't look like much, but buying intraday panics into support, finding out where it bottoms out, even like buying this intraday panic right here, you could have bought this right here at 116 once it found some support. And then rather than selling at the top of the panic, wait for the VWAP push, you know, push it all the way up to, you know, 150, 25%. But this ticker TSMP is what's driving, in my opinion, is what's driving all of these low price stocks right here. I didn't even talk about DLPS. That one wasn't on my watch list. This one I just bought today, but first day of a OTC breakout, and sky's the limit on this one because I don't think it has any resistance. I might be wrong. Let me double check. Yeah, it does have resistance, but nothing recent. You know, it's gonna run into this area at least, you know, 4 cents, 4 or 5 cents, maybe even gets to the 6-cent area, 7-cent area before it topping out. But it's day one of the breakout. So you see what happens. You see the potential of all of these whenever it runs, you know, 2, 3, 4, 5 days. If you can get in on day one, you know, it's major upside for you. But that's all I got. I'm about to go work out. Let me drink the rest of my beer first.
Carbohydrates, gotta have them.
Gotta have them. Electrolytes. All right. Hit me up in chat if you have any questions.
Yep.
Anything at all. I'll be here for you.
Hey,
Thank you, Professor Brown.
yes.
See y'all later. Have a good night.
Good night.
Jamal, turn in your quiz, Jamal, since you want to be on week 3.
All right.
All right.
Hey, I'm about to call you back when I get them in bed about something else personally.
All right. Yeah, just give me
All right.
about to like 10 o'clock though.
Okay. All right.
Yeah.
All right. Bye.